Hello viewers, welcome to our lecture series on CSR, and we have been talking about the socially responsible investment, and in that series of lectures on SRI, this is going to be part 3 of our lectures on SRI. And in the previous lecture of mine, I told you about how to implement the ESG initiatives, incorporate ESG initiatives into your business operations or in order to make your investments really socially responsible, or socially responsible in real sense. And for that we had also discussed about the different toolkits, and after that we were talking about the investment universe, where we were talking taking investment or considering investment on a continuum where we start from 0 and we end up at 10, for instance. And we were considering about two different types of companies, one which is purely working on financial basis or with financial goals, and the other one which is completely philanthropic, talking about the social welfare only as its motive. And then we had a discussion on how to find a trade-off between the two. So that was the point which we have already discussed into the previous lecture of mine. Now let us take up the second aspect of it, where we can categorize SRI from the investor's mindset. What is the mindset of the investor, the person who is making investment? So perhaps very unfortunately, the discounted cash flow technique is an almost universally accepted measure of financial success, where companies are conducting a very quantified analysis, a technical analysis, in order to ensure that their investment is financially viable, their investment is able to fetch them the proper ROI, the requisite ROI, and for that they are using discounted cash flow as a technique. So even if we consider DCF, it is supposed to be universally accepted measure of financial success, and even the Islamic institutions where they talk about the social welfare also, and they can calculate their profit rates, and they can derive NPVs, that is net present value. Non-financial value structures, they differ enormously here. So my dear learners, when we talk about the mindset of an investor, the moment we reach at that level where we have to take a decision, where we have to make a decision as an investor, somewhere at the back of mind the profit motive is there. Somewhere at the back of mind the ROI comes into our picture. Somewhere at the back of mind we have cut-off rate into our mind, that this is my expected rate of return. And there are people, notably this SRI is going to be favored by a wide range of investors. So you find an investor who is having SRI as a top priority. So we cannot say that the profit is the only motive of investment. Even SRI is favored by a wide range of investors across the globe, and some of them at least would be unhappy to be described as environmentalist, let alone green activist, for instance, religious investors. So SRI is basically favored by a wide range of investors, and they feel that my investment should be or must be socially responsible. And this basically this type of investor in turn has spawned a new division in the subject with sustainable or green investment. And they talk about the sustainable investment, they talk about the investment which can sustain. And the proponent of this idea, they basically say that your investment cannot sustain if you don't consider, if you don't make your investment socially responsible. So if you wish that your investment should be sustainable, your business should be sustainable, you want that it should survive for long, then there is no other way but to make your investment socially responsible. Or they talk about the green investment, greening of investment, and it is now promoted by investors favoring such worthy goals. They are basically favoring these types of goals. For instance, reducing greenhouse gas emissions, increasing resilience, securing food systems, taking care of securing your water system, securing forest, securing public transport system, and waste management. So these are some of the burning issues with which our society is surrounded, and we have to take care of these important and significant issues. So can my business sustain if we are suffering with the water crisis? Can my business, can my factory, can my manufacturing units sustain if the public transport system and waste management system is not in line, not falling in line? Can it sustain? So with the investor's mindset, I personally feel that the proponent of these ideas, they have a very broad vision to see. They can foresee that if I really wish my business to sustain, my investment need to be sustainable, my investment need to be green. Because this investment is not only going to provide me the ROI, it is also going to circulate the product which I am going to manufacture. It is also going to circulate the impact which my business, which my investment is going to have on society. So if my investment, my product, my business is going to negatively affect the society, then of course the survival or sustainability of my business is questionable. It can be questioned. So this is another dimension of looking at SRI, where we look at it from the investor's mindset. Another dimension is SRI by type of investment. So this is the third classification, where like other investment, SRI can be analyzed by type of investment also. And it actually spans a wide and growing range of products and asset classes, embracing not only the public equity investments, but also debt, fixed income and alternative investments, such as, if you take example of it, private equity, real estate, venture capital, and there is a complete list of investment options. So just like other investors, these sustainable and responsible investors, they do seek a competitive financial return on their investments. So they are not devoid of that basic idea, basic mindset of investing with the motive of generating ROI. And that is why I told you, when I was giving you the idea about the classification of SRI from the investor's mindset. So somewhere in the back of their mind, the ROI motive, the profit motive is there. It is resting there. You cannot, your business cannot be devoid of that mindset. So just like other investors, even the responsible investors, or what you call as sustainable responsible investors, they do seek a competitive financial return on their investment. If we look at the banks, they largely provide senior debt. We call it senior debt, which is secured, fixed payment structures with security taken over asset. So it is although it is going to give me the comparatively lesser rate of return, but yes, my investment is going to be secure, and I'm going to get the fixed payment structure. I'm going to get the payment in a structured format. And some of this debt finds its way into projects, and certainly they do count under most definitions as socially responsible. For instance, multilateral institutions. If we look at multilateral institutions like European Investment Bank and DFW of Germany, they are basically providing low cost loans for renewable energy projects. So while giving loan to these projects, their motive is not only to generate ROI, because they are charging, they are offering them at a comparatively lower cost. The rate of interest which they are levying is comparatively on a lower side. But for what? Because these companies, these projects are working on a project which is socially responsible. They are talking about renewable energy projects where the energy can be renewed. And if you take the global example of UK, the big society capital, which is known as or regarded as the first UK social investment bank. It is regarded as the first social investment bank established in UK, and it was established in the year 2011 to great fanfare, and it has up to £600 million capital to invest from such sources as dormant bank and building society accounts. So they have taken their sources were dormant bank and building society accounts, and it was done through an act passed in 2008. It was established by an enactment which was passed in the year 2008, and investments from the big commercial banks, that is their sourcing of fund. So they have been they have this much of capital, £600 million of capital to invest from such sources as dormant bank and the social accounts. And more favorable word can be extended towards the large area of microfinance in the developing countries. If we look at the developing countries context, the name of Muhammad Yunus comes to the fore. It comes to the picture, and this person who actually did this entire miracle, who talked about who actually promoted and propounded the idea of microfinance in developing countries, and the proceeding from groundbreaking work of Grameen Bank in Bangladesh, which was founded as long ago as in 1976, and has had a number of imitators. After that, many people started emulating that idea. Although microfinance has not been without criticism itself, people have been criticizing it, but yes, one point is very much clear, that their motive was to ensure that those people who were actually devoid of the financial resources, they can find finance. So the idea of microfinance was to reach to the last person in the queue, to which we in India we call as Antyodaya. The person who is standing at the end of the queue, and you are actually extending the benefit of finance or financial resources to that person. So that is really of immense pleasure for the person who is actually getting the benefit of this kind of finance. So started in 1976 in Bangladesh by Muhammad Yunus, it has actually gained huge acceptance by the society at large, at least in developing countries I can say. And even in India, the government is offering the loans to those priority sectors, which is known as priority sector lending, PSLs. So if you ask me about the Indian example, I would say that government of India has a fleet of schemes where they are offering the benefit, passing on the benefit to the people, to the projects which are of social importance, which is actually for the welfare of the society. And if you name the renewable energy, if you name any project which is of social relevance, the government is ready to provide them loans at a lower rate of interest. And for that, bankers, commercial banks, and even the bankers at large, they have been instructed to ensure that they offer priority sector lendings. So the priority sectors are identified and they are offered loan at comparatively on a lower rate, and at times even their loans are waived, which is I think that which is nowhere in the world. Bailout packages are there after collapse of a business enterprise. Bailout package is there after collapse of a banking system. Bailout package was there, which we could witness in case of US, where after the failure of financial institutions, the government came to the rescue by the way of bailout packages. But the loan waiver have not been there in the news. If we take India as an example, apart from India, I could not find any such example where the loans of farmers can be waived and they are getting the benefit. Although depending on the realistic situation, whether they really need that waiver or not, and that evaluation is done. So that is logical, but it is very much into the picture. So by 2014, this microfinance had made just they have just 17 investment in funds. So in developing countries, the scenario is slightly different. If we take up the example of another example of SRI in bond finance, we call it bond finance. In the year 2012, for instance, Nedbank created South Africa's first green bond. So even bonds can be green now. You can see people think that green marketing can be done. Why not green finance? That is why they might have brought this idea. No, your investment need to be socially responsible, and the bond with a purpose. What is the purpose of issuing that bond? The money which you are going to receive from that, the issue of that bond, where it is going to find the place in terms of investment, where it is invested. That is going to decide the color of this bond, whether it would be green or something else. So this was issued by the Industrial Development Corporation of South Africa, and it was a fixed term retail investment. And funds investment in the green bonds, they were intended to find their way into renewable energy projects in South Africa. So the place where the project in which proceeds from that issuance of bond is going to be investment, that will decide whether your bond is green or not. So in this way, my dear learners, we talked about the different examples of SRI, where across the globe the way it is being implemented and how it is working globally. Now the second question is, can I measure the SRI? How to measure? how to calculate whether my investment which I made with the motive of making it socially responsible, whether it is socially responsible or not, how to measure it. So when I was going through the relevant literature on this topic of the measurement of SRI, I could find that Bloomberg since 2009 and Thomson Reuters also since 2009, though they are basically they have been producing ESG data on companies. And you would find the big data on this, a huge data by Bloomberg and Thomson Reuters on this ESG data on companies is being published. And Thomson Reuters analyzes ESG data from over 4,300 global companies, and they look at more than 750 ESG data points. So 750 ESG data points with which they are working, and it actually covers the complete gamut of sustainability reporting with more than 280 key performance indicators, KPIs, including normalized scores, for instance adjusting by industry, country, or some other parameters also. And now over 3 years for most companies they have been doing so. So one point is clear, that data is available. If you really wish to do the measurement, if you really wish to analyze, the data is available. So finding data is not a far cry, not going to create any problem for us. So Bloomberg collects ESG data from published company material, and they are integrating them into Bloomberg equities and industry services. So this is what they are doing, and Bloomberg they have been saying it for long, that it has researched 20,000 of the most actively traded public companies. So the companies which are actively trading, the most actively trading public companies which are into the trading, they are most actively traded public companies, and they have obtained the company which has obtained ESG data such as greenhouse gas intensity per sales. So on every sale, on each sale, each invoice which you generate as a company, they have obtained the ESG data in terms of their greenhouse gas intensity per sales, water usage per sales, employee fatalities, toxic discharge, and more than 100 of other indicators. These were just to name a few, that what are those parameters on which they are collecting the data. So imagine that one invoice you are generating for, as a seller you are generating for a product, and the ESG data is available, that what is the greenhouse gas intensity of this one unit of sale, to what extent you have utilized the water, what is the rate of employees fatalities, what is the rate of toxic discharge, and many more parameters which are basically quite interesting also. And they are disclosed by over 10,000 companies in 52 countries. So gradually it is going to increase, and it can find the data for all companies operating in each and every part of the world. But as of now it is available for more than 52 countries, and I think every day there is some addition. So this 52 countries is a number which I personally feel that it must have changed, because it was published in the book by Michael Hopkins, where he has published that he has said that in 52 countries it is disclosed by over 10,000 companies in 52 countries. So these type of data, they are all now virtually mainstream, and they are basically a part of most analyst toolkits. So whenever we talk about measurement of SRI, we can do it provided the data is available, and data is available, as I told you, as reported by Bloomberg and Thomson Reuters. So huge amount of energy has been placed, especially by academics. They have been putting a lot of energy into this field in analyzing the relative financial performance of companies with high CSR scores compared to those with the low ones. So if we look at the relevant literature, while digging the literature, I could find that there is a number of researches, huge number of researches which have been conducted, and they have analyzed the relative financial performance of companies with high CSR scores compared to those with the lower ones, whether their financial performance was anywhere or in any way linked with the CSR performance or not. For that they have conducted. And proponents of SRI, they argue that SRI outperforms conventional investment. the socially responsible investment outperforms conventional investment. This is what we found as a conclusion to those researches. Most of the researchers, they have shown affirmative to what I said just now. So another major area of development in SRI has been the evolution of SRI indices, the way these indices have developed. The longest running SRI index, the Domini 400, and now the MSCI KLD 400. It is now known as MSCI KLD 400. It was started in the year 1990 in the month of May, and currently the MSCI ESG indices include various indices. I am going to tell you briefly about those indices. MSCI Global Sustainability Index is the first one, and these benchmarks target the highest ESG rated companies, making up 50% of the adjusted market capitalization in the each sector of the underlying index. And my dear learners, these indexes are designed for investors who are seeking exposure to companies with strong sustainability profiles. So you can find the data there with relatively low tracking error to underlying equity market, and they are reconstituted annually. And the family of these indices includes MSCI, ACWI, ESG index, MSCI World ESG index, and MSCI EM ESG index. So there is a complete family of these indices. Another index is MSCI Global SRI index. And if you look at this index, these benchmarks consist of companies with the highest ESG ratings, making up 25% off. The first one was making up 50% off, but this one is taking up 25% of adjusted market capitalization in each sector of a parent MSCI Global Sustainability Index, and it excludes the companies. This is very important to note here, my dear learners. They exclude companies which are involved in alcohol, tobacco, gambling, civilian firearms, military weapons, nuclear power, adult entertainment, and genetically modified organisms, GMOs. So these are the areas which are excluded from their index. So the companies which are involved in these activities which I have discussed just before, they are not included into their index. So they exclude them just to ensure, just to give a reflection that these companies, basically their investment is not socially responsible. That is why they have been excluded. The next one is MSCI Global X Controversial Weapons Indexes, and these benchmarks are designed for investors who wish to avoid investment in cluster bombs, in landmines, chemical and biological weapons, and depleted uranium weapons. So basically this index is giving an idea if you are willing to invest into the defense sector. So these are the areas where you can find as per the index that which company is socially responsible and which one is not. And the selection universe for the MSCI Global this X Controversial Weapon Index is defined by the constituents of MSCI AWCI. The next one is MSCI Global Environmental Indexes, which is basically providing us this index family provides low carbon, fossil fuels, exclusion, and thematic indexes for investors. So their focus is on environmental issues, and increasingly the institutional investors, they are actually in urgent need to consider how climate change may present risk and opportunities. And the second question is very important: how to manage carbon exposure in their portfolios. So for them this index is of immense importance, and they can find the way out, they can find the answer to their question. And they are designed to support various low carbon investment strategies, and includes the MSCI low carbon indexes, MSCI global fossil fuels exclusion indexes, and MSCI thematic indexes. So my dear learners, these indexes are helping you. With the help of these indexes you can find that which company to consider for my investment and which company to not. Barclays MSCI ESG fixed income indices are also there, and it is basically includes more than 500 standard and bespoke ESG fixed income indices, and it represents the most widely used ESG strategies and investment objectives. And with this, my dear learners, I tried to provide you the the brief idea about how to do the measurement of SRI, how to conduct a measurement. So data is available, analytical tools are available. Now the question is all over that yes, we can do the measurement of SRI also. Now the very pertinent question which comes to our mind is, sir, what is the current state of SRI? Whether it is only confined to be called as an evolving trend, or it is more than that. Yes, of course, some of the researchers, they are of this opinion that it is an evolving trend. They have argued that it represents a social movement, citing the pioneering social rating agency Aries as actors who have deliberately hidden their social agenda behind a facade of business conformity in order to build legitimacy. But others have preferred a more moderate kind of assessment of SRI as just an investment trend. Some people say that yes, it is only a trend. The most recent developments supporters claim they are based on a growing awareness by their population, investors, companies and governments alike of the impact of ESG risk on long-term issues. And it ranges from the sustainable development to long-term corporate performance, as well as a steady growth in impact investment amounts. So, my dear learners, what we have to understand, some people feel that yes, SRI, the current state of SRI is only evolving. Some people say that to promote stronger corporate social responsibility by boosting the share prices of those companies with good ESG scores as a result of greater demand for their shares, building long-term values for companies and their stakeholders, you have the only way out, that is your SRI, making your investment socially responsible. Some critiques are also there. Some people say that it penalizes the poor. Marxists and many other besides believe that SRI is a palliative measure because it penalizes the poor. They believe that it is a palliative measure, the acceptable face of a deeply morally repugnant international capitalism. According to the principle of the worse the better, it would be ultimately more desirable and would certainly hasten the fall of international capitalism if there were less SRI, not more. So this objection hardly needs a rejoinder, as its proponents are not much amenable to debate. There are different other critiques also. SRI fails to address inequality. Some people believe that SRI is basically ESG focuses mainly on G only, that is much of governance and not of environmental and social issues. Some critiques, they feel that SRI muddies the investment waters. Some people say that it cannot be measured. They may not be legally permissible, it is an illusion, it is full of contradictions. But one thing is clear, for your information, I am just concluding it by saying that SRI is clearly it is although a highly contentious yet growing area within the fund management, and it encompasses a huge range of investment styles and every form of asset. So my dear learners, if you really wish to be socially responsible, then your investment is supposed to be mindful of the impact it is going to have on the society. So if you really wish to be called as a company which is socially responsible, SRI is a way for that. So with this, I hope you must have enjoyed today's lecture of mine. I am concluding this very topic of SRI, socially responsible investment. We have discussed the different dimensions of SRI in these 3 lectures on this topic of SRI. Thank you so much.